this session for deep dive in the market with our market analyst. My name is Mohammed Shanti, a financial analyst at FX Payza Group, and I will be analyzing the markets for you fundamentally and also technically. And also at the end of this session, I will give you a tip, a trading tip, especially for scalpers. I know you guys are into scalping strategies. I know in Nigeria and Africa, people love trading really fast, doing things as fast as possible. And I know you love to trade small and then entering the market and getting out the market. So at the end of this session, we will give you a small trading tip. And also I will be talking about the technical insights and the fundamental insights about the major pairs and also some major commodities in this market. Starting with oil, as you can see in this in the screen over here in the MT4, oil remains supported as Russia pursue war on Ukraine. You can see prices reaching the benchmark of 100 and even defeating that level and going as far as 104. And currently the bullish momentum is continuing as sanctions against Russia drive oil prices higher. Also, if you consider inflation outlook remains a key concern for central banks, including the ECB and the Federal Reserve, and talks about hiking interest rates. Probabilities actually pushed down a little bit from hiking to 50 basis points. Now it becomes more higher to 25 basis points. Now, investors are actually pricing in the prices to the interest rates to actually pushed to 25 basis points with a higher probability according to the CME group. You can check that out using the CME website. Also, from a technical perspective on oil, we can look at it in a different shape. Now we will start with the 4 hours and then go to the daily and then go to the 15-minute chart just to cover every single trader out there. So starting with the 4-hour charts, if you can see, the prices are currently actually moving within an ascending channel. And this ascending channel were defeated twice. One of them was here just earlier in the European session, just before the US session, but during the US session and the latest deal between Ukraine and the negotiation failed, the Russian still attacking Ukraine. This is actually hurting the sentiment, and you can see that on the indices where the sentiment went lower. So the risk off is going to the downside, and people and traders are actually going all the way to trade commodities and also you go for the safe havens such as the dollar and even gold. If you look at from a technical perspective, we can see that the prices are currently standing at the levels of 104. Now, as long as prices are above the 100 mark, the bullish momentum could continue all the way to 210. And as you can see in the 4-hour charts, there's no clear resistance levels available. That's why the bullish momentum could continue all the way to 110. This is for a long-term view, especially with the war continuing, because the more the war continues, that means there could be sanctions on Russian supplies, and a sanction on Russian supplies, that means supply shortages, and hence prices continue to go higher. So higher demand, lower supply, pushing prices higher. Also, inflation are going higher. So all of that factors are actually pushing prices all the way up. Now, from the downside, if prices managed to go all the way to, let's say, 90, 98, this is where the tip of the ice could actually break. So let's say prices went all the way down. As long as prices stay within this range, this ascending channel, the uptrend could continue. So we could see prices retrace a little bit and then go as low as 90 and then continue to higher. Now, if prices defeated this level, which is the 90 mark or the 89 mark, a main support line awaits for sellers, which is the 78. So traders, most of them would actually wait for a dip to enter, because this price is way too high now. A lot of traders wait for this phenomena of a small dip and then re-enters the market. So basically, if prices dipped all the way to 78 and breach that level, sellers could aim for the 84.41. Now, this uptrend, this long-term uptrend, finishes or ends when traders or sellers defeat the 84 mark. then we can say it's a bearish trend in the long-term view. As long as prices are above the 90, the bullish side continues. This is confirmed by two indicators. First of all, we have the stochastic and also the MACD. The stochastic is currently standing in the overbought territory, but still shy from going down. So we could see the stochastic continuing in the overbought territory. And once the prices go down, this could mean a small consolidation. This is what other traders are waiting for, the small dip where stochastic to confirm. Another indicator confirms what's happening is the MACD. You can see there is a bullish crossover to the upside. Prices are still above the zero line, which indicates bulls remain in control. And then you can see in the charts over here that prices are still going higher. If you look at the daily, there is no clear resistance awaiting the oil prices. So if we go all the way back, you could see no resistance from 2018. So prices could continue to the upside. This is what we are trying to. If you go back again to old dates, you could know what kind of resistance awaits traders. Okay. If you look at the 15-minute chart, 15-minute chart, similar story. We could wait for a small dip below this mark and then 8. So maybe wait for prices to reach the 100 or 98 mark and then trade it again. This is one way to look at it for oil. I know if you have any information, if you seek out any information about oil, please contact us through our channels. Now, going to the euro dollar. Before we analyze the euro dollar, we need to look at the dollar as it is. So what's happening to the dollar? Now, the dollar is currently being demanded by other traders. Why? Because whenever there is fear or whenever there is tensions, whenever there is something like coronavirus incident, people tend to go to safe haven. And one of the most main safe havens in the world is the US dollar, including the franc, also the yen, and also gold. So currently, gold, the US dollar is dominating the markets. So the US dollar is reaching almost near all-time highs, not all-time highs, but near the 100 mark. And this is supported by, if you look at from the economic side, the ISM February reading for the manufacturing PMI came 85.6, which is very strong compared to January's reading, which was 57. Now, any reading above 50 indicates a strong growth in the sector, but the numbers are keeping growing. This is supported by inflation numbers. Okay. Also, the dollar continues to gain as the index is currently above the 97, while the euro dollar remains under pressure because of the strong dollar, and could continue to do so because the Russian-Ukraine situation persists. Now, 2022 main highlights was the inflation, how central banks could tackle inflation. Now, a lot of traders priced in for the March meeting for the Fed to push interest rate higher, and they even had a probability of pushing the interest rates from 25 basis point to 50 basis point. The probability was 93%. Now, when the tension started, this tension actually lowered the chances of the increase of interest rates from 50 basis point to 25 basis point. This actually boosted indices a little bit because, you know, there's a reverse relationship between indices, okay, and stocks. So stocks actually went higher today a little bit. We're gonna show it to you now in the screen. You could tell that there is demand for dollar against anything in the world at the moment because of these tensions. As long as these tensions continue, the geopolitical tension between Ukraine and Russia, traders will focus on the dollar, the US dollar. So at the moment, you can see there is a huge bearish movement, a selling pressure on the euro dollar. Now, officially, the prices has defeated the 1.1120, which was a really huge resistance line, a level which already prices retraced from it twice, not just once, 1 and 2 and 3. These 3 candles, every time the price reach this, prices reach this level, prices retrace. Now there is a breach. This could indicate a continuation to the downside. Now, this is confirmed by whom? By the MACD. A crossover, there's a crossover from the slower MACD with the faster MACD line, and a crossover to the downside, which indicate that we could see a downtrend, a really strong downtrend. Now, what is the next level for traders? So if you look at it at the daily chart, you can tell from these areas, which was in 2020 to in June or July, these prices are the area, the support line over here. This is where prices could be targeted if they were defeated, and it's actually happened. Now the next level will be here, which is 1.0890. So if you put, we need to put an arrow over here so we can tell what is this price. So this is 1.8, 1.87, 1.0879. So this is the main level that traders in the long term would aim for, especially the central banks. There is a divergence between the ECB and the Fed. Now the Fed is expected to increase interest rates. Higher interest rates usually boost the currency of the local currency. Now the ECB is not willing to push interest rate just yet. So higher interest rate for the dollar compared to the euro. So basically traders would focus more on buying the dollar and selling the euro, so they would gain interest from that. So this is one of the reasons why there is a bearish downtrend happening. This priced in over here happened before, when the Fed decided to push interest rate higher. Now you could see that difference. You could see that difference in the pound, for instance. Looking at the pound on the 4-hour chart, now there was some consolidation over here. Now this movement over here happened because of what? Because of the tensions. More demand on the dollar, even bigger than the pound. And usually traders consider the pound as a risk currency where you can actually speculate on to make trades, but the dollar is more a safe haven. So this consolidation, or this uptrend that were happening, if you look at the prices over here, prices were defeating the 1.34 mark and already reached all the way to 1.37. However, when the tension came, or when the Fed decided to push interest rate higher, the consolidation happened. Now, how did this downtrend happen? This happened after the tensions. When the tensions increased between Russia and Ukraine, this has made a more demand on the dollar compared to the pound. However, the pressure is not similar to the pound, to the euro dollar. So the selling pressure on the euro is bigger compared to the pound against the dollar. But still, there is a bearish pressure confirmed by the stochastic and can be confirmed also by the MACD. So let me just add the MACD here so you can tell. So the prices currently are going down, still not in the oversold territory. That means the bears are in control, and we could see prices all the way down. Also, the next level will be 1.3275. 1.3275 is the next level for sellers to aim for. A defeat of that level, we could see prices all the way to the 1.32 spot, and then next to the 1.3180 and 70. So we could wait for a confirmation where there could be a crossover to the downside. And as you can see, the fast line is going down, and the slower lines of the MACD are also going higher. So we could expect a continuation by seeing a crossover to the downside. This could give us an insight for any short-term trades that I might find or look for a small retracement to the upside, and then enters to find a really better setup for my short-term trade or with the selling purposes. But still, from the top side, as long as the prices remain below this number, which is 1.3470, the bearish pressure could continue. Now, if prices retraced and all the way to the moving averages, to the simple and exponential and smooth moving averages, we could say that the prices could consolidate in that area. Now, from the top side, as long as the prices if the prices actually defeated the 1.3630, then we could say there is a bullish uptrend. Other than that, the downside continues. Going for the dollar yen, the dollar yen, there is a higher demand on yen compared to the dollar, because the yen is considered a safe haven also, but still this demand is a little bit stronger, but not that stronger, because you can see there is consolidation or volatility in the yen, but still there is a demand on the yen now, because traders use it as a carry trade. They benefit from the borrowing cost of the yen compared to the US dollar. That's why there is a demand on the yen. However, if you look at it at the long-term view, you could see there is a bullish uptrend. So what we're seeing here on the 1 hour chart, it's basically a small consolidation and a small retracement happening. So this could be confirmed, as you can see from the stochastic. If prices continue to go higher in the next level, it must defeat this area, which is, we should add an arrow over here. You can see, so you can see the price, which is 115.19. This is a crucial area, which could be a pivotal point for traders. So if prices went above this, we could see prices all the way to the resistance levels of 115.70. Going to gold prices, I know a lot of people love trading gold, especially in the short-term trades, because they aim for $2 or $3 and then they get out. So they want really short-term analysis. I will be giving you that, but we need to talk about it in the long-term view and the short-term view later. So starting with the long-term view. Now, I'm showing you this picture or this chart at the moment in a bit long-term view. Why is that? Because I wanted to show you this resistance line. Now, this resistance line was a really important, which was 18.30 an ounce per dollar, a dollar per ounce. Okay, so what happened is that it tried to defeat it earlier in 2021 November, and it actually reached the 1877. Now that came before the interest rate decisions or the expectations of higher interest rates. Now, higher interest rates means, from all over the world, means bad for gold. It's not really good, because historically, if you check the interest rates, whenever it goes higher, gold usually dips. Nonetheless, because of the tensions, what happened is that prices actually defeated this range, this resistance level again, and now it's going all the way higher. Now that, if you look at it in a shorter view, or let's say in the nearest view, you could tell that prices reached the 1974 and it dipped down. Okay, and dipped down again, but still the bullish momentum continues. You can see that from the MACD, there it's still in the positive territory, and also the RSI is in the overbought, which means we could see a small reversal. Now, there is a short-term uptrend happening. So the main support level is the 1878. A defeat of this level from the downside means an end to this bullish momentum. Okay, and if prices go as low as 1831, we could say this bullish uptrend finished completely and a new downtrend could happen. Okay, so as long as prices from the top side stays above the 1928, which is this high over here, we could see prices reach out the 1974 again. Now, if you look at it at a short-term view, let's say the 15 minutes. Now, in the 15 minutes, before going that, if you look at the geopolitics, prolongs the gold safe haven alert. Inflation outlook looks up. Inflation boost whenever inflation goes higher, especially the interest rate, even though there is expectations of higher interest rates, but still the interest rates are still low. So once that happened, the pricing in could increase for pushing gold down. But until that moment, especially with the tensions, prices will continue to go higher and higher. Now, in the short-term view, very short-term view, if you want to scalp using a simple strategy like this one, always wait for a small dip and wait for a retracement and a confirmation from the indicators that you're using. especially from the top side. The prices currently defeated this level, which is the 1928 or 1920, and continued to defeat the 1928. What a lot of traders would do is that they would actually wait for a small dip, and then if prices stabled below the moving averages, they would aim for the short-term profits of till 1900. So I would wait for prices to defeat the 1918, which is the short-term moving average, and then aim for the 1900. $18. A scalping needing, like, maybe I would need 3-4 candles, which means in an hour. Now, if I want to go as low as 1 minute, I would wait for prices to defeat the moving average and aim for the longer moving average, which is 1922. So from 1932, wait for it to go as low as 1929 and aim for the 1922. That's another way to look at it. However, I would wait for confirmations from my indicators. So I know that the setup is currently bullish, yeah? So what should I do? Should I wait for prices to go down, or should I take it from here? This is a question a lot of traders ask. So what should I do? If you are at the highest point, you shouldn't trade. Why? Because there's a chance that our prices could retrace from this highs. I would say, oh no, I took it from a wrong place. What you should do, be patient. Wait for prices to retrace to either to the 1930 or to the 1929, or and wait for it to retrace back again. Once it retraces back again, aim higher to the 1935, which is the last high. Okay. If prices stabilize below the 29, so let's say prices were here later on, if prices went from here till here and didn't trace back, I would take a trade from this area as a sell, but with a very short-term goal. So I would aim for the 1923. Why? Because I know the long-term view in the 15 minutes or even in the 1 hour chart, there is a bullish setup. So higher risk when I take a sell trade, a lower risk when I take a bullish trade or buy trade, but I wouldn't take it from the highs now. I would take it from a small lower price. This is one way to look at it. Okay. Lastly, I want to talk about the index. So the Dow Jones index. As you know, the Dow Jones index represents the major 30 major 30 companies that has industrial components, or they are inside in the industrial industry. So currently, you can see there was a small retracement to the upside. Now, if you look at it on the 4 hour chart, you could see prices tried to go higher, yeah? But there was a small problem. The bulls tried to defeat the moving average, the simple moving average first. But what happened is that there were talks between Ukraine and Russia. These talks failed because the Russian invasion will continue. Now, once traders know that there is an invasion happening and it's continuing, this actually affects the risk of sentiment. So there will be a risk of sentiment. So it wouldn't be a risk on sentiment. So what's going on is that a lot of bearish traders actually waited for this phenomena, because going down, once it went up, they're taking it again down. So this is a high, a low, a lower high. Traders, sellers would aim for something lower than this price. So this high, so let's add the arrow so you can see the prices. So this is high, the first high, and this is the second high, yeah? Now this is the third high. If you look at the lows, one low and another low and another low. So traders are now doing a downtrend perception. So what they are waiting for is, one, they could actually take a trade from here, aim to this support line, support point, or even aim high, aim lower. Okay, this is the bearish traders. This is for the long-term view. Or they could wait, the buyers could wait a defeat of this level and then aim higher to the 35 mark, 35,000 mark, and then next to the 35,800. 880. But this is Dow Jones. A lot of traders don't trade it in the 4-hour chart. They love to trade it really fast because it moves really fast. The volatility inside this indicator, inside this index is high. So let's go to the 15-minute chart and see how we can trade it. Now, see, after the defeat of the moving average, traders actually made bets on another bullish pressure, and it actually worked. Now, in the following day, there was a gap to the downside because of the tensions, and again, bulls tried to push the prices higher. But once we saw or confirmed that the talks failed between Ukraine and Russia, what happened is that the bearish pressure wanted to defeat a dynamic support, which is this moving average. If you look at the numbers in the short-term view, this number was 33,600. So a defeat of that level happened, and now they are pushing prices all the way down. What's their aim? Their next aim is this area, which is the 32,841. This is a very short-term scalping, and it's confirmed that there is an oversold territory, but we could see prices go high a little bit to here, and then we could see continuation. Now, when does this end? If prices went back above this previously dynamic support, now it becomes dynamic resistance. So when prices go above this area, we could see prices go higher and higher and back to the 34,172. Now, if I know a lot of traders love using indicators, just to confirm, the indicators that we used here is the stochastic and also the MACD and 3 moving averages. The 3 moving averages used are, one of them is let's say the fastest of them, exponential 50 mark. We used also the simple 100 mark, and we used a smooth for the slower one of them. So we use the slower one to confirm the trend. If prices are above the smooth one, that means trend is up. If the prices are below the smooth, trends are down. So basically, if prices are below the smooth one, I would seek out trades, bearish trades, basically. So I would think of the stochastic and the MACD with a bearish mindset. So I would find entry points based on that. Finally, just a reminder that the euro dollar is going down, and currently these levels are the most important. Now, if you guys have any information, or if you want any information, or you're seeking out any kind of technical information, please contact our client support. They will help you out. And if you need more information, please contact us via YouTube comments. Please subscribe and like the video. Thank you so much for your time. I hope I gave you insightful information. If you need our help with anything, please contact us. Thank you so much for your time, and good evening.